I had a little discussion about international trade during the same class where we had the review for the midterm. And of course, since we had the midterm, you may not remember exactly all that we went over that particular class. And so I thought that since I assigned a homework assignment, a couple of homework questions with regard to trade, I'd just quickly go over a trade example. My mother actually went mountain climbing in Nepal a few years ago. Pretty adventurous of her, and her husband, my stepfather, went, and literally all I got was this. I don't call it a lousy T-shirt. It's a very nice T-shirt. We'll think about Nepal in terms of just our example for international trade. So just imagine you have a country, we'll call it Nepal, where there is no trade, and there's a supply and a demand for tea. So this is going to be the tea market, and of course there's a quantity and a price, and so we will call this the equilibrium quantity, and we call this the equilibrium price. We'll get into trade. Let's review that this area here would be the consumer surplus, and this would be the producer surplus. So the consumer surplus is above the price, below the demand curve, and the producer surplus is below the price, above the supply curve. Above the price, below the demand curve is consumer surplus. Below the price, above the supply curve is the producer surplus. And of course, it's all to the left of the equilibrium quantity. Anything above that, the transactions do not happen. So there's no surplus of any kind. Now let's imagine that the world price of tea is actually above the domestic price in Nepal, and that Nepal's government and its economy develops to the point where they're open to international trade. So we'll just put the world price of tea, we'll just assume that it's somewhere up here. This will be the world price. So if the world price of tea is above the equilibrium price within the country, that means the producers of the tea can sell as much tea as they would like to sell at the world price. And so how much tea will they want to produce? Well, that's easy to find out. They're going to want to produce this quantity. This is the quantity they will want to produce where the supply curve hits the world price. If they can sell as much tea as they want at the world price, they'll want to sell this quantity. That's going to be the quantity supplied at the world price by Nepal tea producers. Well, how much tea are the Nepalese going to want to drink at the world price? Well, again, that is very easy to figure out just by looking at this chart. They're going to want to consume tea at the world price of this amount, and that's where the demand curve intersects the world price. So this is going to be the quantity of tea that is going to be demanded at the world price by the people of Nepal. And so the producers are going to produce this amount. The Nepalese are going to drink this amount of tea. And the difference is going to be the amount of tea that Nepal is going to export. And so it does turn out, I looked it up on Wikipedia before I started writing this, that Nepal is an exporter of tea, which tells me that the world price of tea is higher than the domestic price of tea in Nepal. And so Nepal produces more tea than it consumes within its own country, and exports the difference. Now, notice that, remember I said the consumer surplus is the difference between the price and the demand curve. So the price has gone up from what it was before trade, and so the consumer surplus has shrunk. So the consumer surplus, which used to be this bigger triangle, is now down to this tiny little triangle here. So there are losers in this particular trade example, and the losers are the consumers of tea within Nepal. They're facing a higher price, they're going to consume less tea, and their consumer surplus is going to shrink. But the producer surplus has gotten enormous, because the producer surplus, which was this triangle, is now going to be this large triangle. Remember, the producer surplus is the area above the supply curve, below the price, and so the producer surplus has increased a lot. Some of the increase of producer surplus is the former consumer surplus. So this example trade does benefit producers at the expense of consumers. But this triangle here is an increase in producer surplus that is not related to a decrease in consumer surplus, but it is a net benefit overall to the economy and to the society of Nepal. And so while tea drinkers lose, tea producers win by more than what the tea drinkers lose. And so the society as a whole is better off. The total surplus has increased. And the total surplus is increased by this amount. So as I said at the very beginning of the class, one of the principles of microeconomics and macroeconomics is that there are gains from trade. And at the micro level, we say there are gains from trade when any two individuals enter into a transaction that is mutually beneficial. And in terms of macroeconomics, there are gains from trade at the world level. That Nepal gains from trade. It is producing more tea than it consumes domestically, but the total surplus in the country is increased by the fact that they are able to export more tea than the people of Nepal themselves would like to drink. So I hope that helps you figure out some of the answers to the questions in the homework. The example in the homework is going to be slightly opposite of this in terms of where the world price is with relative to the domestic price. So it's not exactly that you can just copy this down and turn it in. You're going to have to do a little bit of thinking. But I know you can do it, and I look forward to seeing you in class on Tuesday.